Will the Italian vote bring Europe to the brink once again? This seems to be the question on many analysts' lips at the moment. When we look at Italy, what we're seeing is a country the government has got borrowing costs down, but nonetheless the real economy continues to struggle. Joining me down the line to discuss the economic implications of this weekend's election is Andreas Johnson, economist with SEB. Now, Andreas, final opinion polls predict that a vote will deliver a working majority in both houses for a centre-left coalition, governing in alliance with former Prime Minister Mario Monti. But according to some, Italy's election for both chambers has the potential to tip the Eurozone back into instability if the outcome does not produce that result. What are your thoughts?
Well, the Italian electoral system implies that there's a substantial risk of a hung parliament. So if no working majority can be formed, uncertainty will increase and bond yields are likely to rise. But then it's quite difficult to predict how large this effect would be and to what extent this would spread to other Eurozone economies. Since the ECB announced the OMT program in September last year, bond yields in the Eurozone have decreased substantially. So the ECB has shown that it's prepared to act quite vigorously if necessary. So even if yields rise, they should not move back anywhere close to the levels that we saw last summer, since you have this, since the ECB is ready to act if there should be an increase in instability in the Eurozone.
The Italian economy for some time now has comprised of a declining GDP, tightening credit standards, a decrease in capital stock and surging unemployment. These factors have led some analysts to believe, regardless of who wins the parliamentary election, the long economic decline is likely to continue, because the next government won't be strong enough to pursue the tough reforms needed to make its economy competitive once again. But what is your outlook for the Italian economy going forward?
Well, right now our GDP forecast for 2013 is that GDP will fall by close to 1%, and then there will be a very weak recovery in 2014. But looking further ahead, growth is set to remain weak. There have been some reforms during Mario Monti's government, for example, of the labour market and the pension system, but much more needs to be done. And if you look at the last 10 years, the Italian economy grew by only 0.8% annually on average. So these reforms that have already been implemented should be enough for Italy to at least beat that rate of growth going forward. But growth will still be very weak if you look at a 5 to 10 year perspective. There have been quite a lot of austerity measures already implemented, but this is a kind of a trade-off, because you don't want to push it too hard, because that will have a very large negative effect on growth. But I think indeed more is necessary, and for this year it would be around maybe 9 billion euros in order to reach the deficit target for the end of this year. So I do expect that there will be more austerity measures.
Investors, on the other hand, do not seem to be too worried at present. Italian benchmark 10-year bonds were trading around 4.4%, almost a full percentage point lower than those of Spain. Where is this so-called confidence coming from?
Well, actually, Spain is in a much more difficult situation than Italy. Italy also has poor public finances, but Spain is in a much worse state, and the same goes for the macroeconomic development. The Spanish labour market, for example, is in a very poor state, and there's a continuing housing market slump that we don't have in Italy. So I think this explains the difference in bond yields.
Taking into account everything we've discussed, what impact do you think it could have on the euro immediately after the election, as well as the coming weeks and months?
Making exchange rate forecasts are always very difficult. It might be especially difficult in this kind of situation. But the natural thing to expect is that if the election does not produce a working majority, is that the euro should weaken somewhat in the short term. But on the other hand, if it looks like a government would be formed, then I don't expect much to happen to the euro, because there's many other things that affect the exchange rate. So I don't expect the euro to be affected that much by this election.
Andreas, thank you very much for your perspective today. Well, that's all from me at the moment, but click back to Dukascopy for an interview on Thailand's central bank meeting minutes with my colleague Jennifer Cordinling. Bye for now.